We're about 2 hours into trading. It is Wednesday, September 22nd, as I like to call it, Fed Day. We have the FOMC statement this afternoon, about 2 hours before the close. So this is a time to be very, very cautious. Trading is really going to slow down. It's going to be a lot of chopping back and forth, but we'll take a look at the market in a second. Let's take a look at what happened yesterday. I always like to go back and review the previous trades and the instructions that I provided to you so that you can gauge how effective the system is. I don't just throw a bunch of stuff out there. I give you trade ideas each day, and then I follow up the next day to see how they turned out. So yesterday, I was telling you that we had some pretty serious market selling. There's a big gap down. You can see the steady selling that we had on Monday. Nice little bounce late in the day. You can see how we were trapped. If we went lower, we would fill in some of this gap. If we went higher, we would fill in some of this gap. So we could have gone either way, but we could see very herky-jerky trading, long candle, compression, long candle, compression, long candle, compression. So this is not very good price action. Yes, this is a beautiful 10p cross up here that told us to favor the short side. This is a beautiful 10p cross right in here that tells us to favor the long side. But as all of this is forming, and as I'm doing the video yesterday, I told you here is my game plan. I'm expecting the market to chop around ahead of the Fed. Traders are not going to be taking any large positions. So how would I trade that? I would take and draw an upward sloping trend line here on the S&P 500. I would do that, and if it is breached, we have a bearish 10p cross right here. So I'm going to go out and I'm going to find you a couple of stocks to short. If this upward sloping trend line in the SPY is breached, I want you to watch these two stocks and then you would short them. Those were the instructions I gave you, and you can see how this is unfolding. This is about 2 hours, 2.5 hours into trading. We've got our bearish cross right here. Let's take a look at this stock. Here we go. This is a stock that we're looking to short right in here. It's been weak all day. Orange line below 0. That indicates relative weakness. There you can see it a little bit more clearly. So we're going to fast forward a little bit. Aha. There we are. We're right on this 10p bearish cross. Now we just need the market to roll over, and then we're shorting ATVI. There we go. There we've got our breach of the upward sloping trend line, and we have a bearish 10p cross, and we have a super weak stock in our sights. So this is what we're going to be shorting. ATVI, and if you had followed those instructions, you would have done very, very well. This is the process that we use every single day, and it works. I didn't just show you ATVI, I also showed you RAD. So we need to go back, get back into that timeline right in there. And I don't have to go all the way back for you to see what happened. You're probably seeing this unfold as I scroll back. But there's your breach of the upward sloping trend line. This is the stock that we had all queued up and ready to go. You'd be shorting it here. We've also got a new low of the day. Thank you very much. Nice trade. So what do we got going on today? Told you that we've got the FOMC meeting. We've had a nice little upward bias to the market. S&P futures are currently up 50 points, 50, on news that Evergrande is going to be making a coupon payment. So that's taken some of the credit worries out of the picture for right now. By the way, I've done a lot of reading in 2007 on the countrywide failure, and I wanted to see how analysts were really approaching that and what they had to say, and is this going to be a big deal, is it not? Hardly any of them thought that this was going to be a big deal. Hardly any of them thought that there would be other issues. Hardly any of them thought that there could be contagion or that countrywide could be a canary in the coal mine. Evergrande, we don't know. canary in the coal mine? Are there more like it? China going to step in and bail them out? We don't really know that either. So we need to be very watchful. The one takeaway from all of that is that from 2007 into 2008, it took a long time for those credit concerns to really surface and for the market selling pressure to finally take root. So even if there's a financial crisis looming in China, it may take a while for that to unfold. Now, I believe that their market price action is telling us that there are some deep seated issues in China. So we need to be very, very careful and very watchful for that. Will it destroy our market between now and year end? Probably not. Could we see some nervous jitters yet? Yes. We've got the FOMC. They start talking about tapering. Market's not going to like that too much. We know from the FOMC minutes that we had a month ago that yes, Fed officials are discussing tapering and the need to start doing it. Now, everybody's saying that's not tightening. That is not tightening. That is simply reducing the Fed's asset purchases. So they are not raising interest rates. Well, it is a form of tightening because it's starting to restrict some of the liquidity, but there's so much dang money sloshing around out there. The initial reaction won't be great, but I think that the market will be able to look past that. It'll take a deep breath. We have seen some pretty decent market selling right now. And you can see this downward sloping trend line on the SPY. I've referenced it many times in the last 2 weeks. This is as steady a selling as we have seen in a year. So this is not to be discounted. This is not to be ignored. We got a big gap down in here. Looks like we're going to fill in some of this gap. What I'll be watching is this downward sloping trend line right here. I'm going to pick a couple of bars out and we'll use that. That's not a very good downward sloping trend line. I think I picked the wrong bars. So let's get something more representative. I like that candle right there. And I like that candle there or this one here. That gives me a nice downward sloping trend line. The market is likely to test that. Let's put up the major moving averages. Very important for us to get our longer term market bearings. You can see if another couple of days elapse, the 50-day moving average is probably going to converge with that downward sloping trend line in here. That will be a major resistance level. We've got a bearish explosion alert. I'm not going to look at it. So we've got this resistance level right here. If the market goes up to it and tests it, I believe that we're going to see it roll over a little bit, test the downside again, double bottom, higher low would get me excited that yes, the selling for September is over and the market has a chance to move higher. But it's way too early right now to go out and make that call right now. I believe that after a heavy round of selling like that, we're going to see some tests and some retests until it's confirmed. Then buyers will get more confident. Then buyers will get more aggressive. Then we'll have the release into year end. So for right now, let's see what happens. For longer term swing trades, I still think this is a good time to be on the sidelines. The market did come down and it did test that 100-day moving average. Hasn't done that in a year. Very nice. Okay, so we have some temporary support in here. Looks pretty good. So I would favor the bullish side today. But remember, we've got the FOMC statement. So the best thing you can do right now is nothing. We're about 2 hours out from that statement. So this is a time to really take a long lunch, look for stocks on the long side, look for stocks on the short side. Be ready for that announcement. So let's talk about how to trade that actual number, and then let's take a look at some trades. Typically, on an FOMC announcement like that, you're not going to see much of a reaction. Guess what? Everybody's expecting a very passive, very dovish Fed right now. So I don't think there's anything that they can really say that's going to surprise anyone. But if we see long green candles stacked consecutively like this, one on top of the other, very little overlap. Let's say that this is the first 25 minutes of trading after the Fed announcement, you see this. You're going to want to get behind that. You are going to want to buy that, and you are going to want to exit on the close. Why? Because oftentimes after the initial Fed reaction, we will see an overnight reversal. You get behind this, you get a nice move into the close, take your gains, be happy with it. That's how I would day trade it. On the other hand, if we see long red candles stacked consecutively with very little overlap after that Fed announcement, then you need to favor the short side. And I'm going to see if I can find an example of those long red candles. There we go. Long red candles stacked consecutively. Right there, you got 4 of them. You see a formation like this, it tells you there's more trouble to come. You can get short on a pattern like that. Anything that is not exactly this or exactly the long green candle stack, avoid it. That means there's no strong trend. There's no strong reaction. If you get a long green candle and then a red candle and a long green candle, that's nothing. That's not going to do it. That's going to tell you that there is a mixed reaction to it and that we're going to see volatile trading into the close. So you either want to see consecutive long red, then get short. Do not fade this move. You will get your head handed to you. Or wait for long green candles to be established and then go long. Exit by the close. Market is undecided what it wants to do. We're on major support. Great. Could go higher. Seen heavy selling pressure so far in the last 3 weeks. Market could go lower and take out the 100-day moving average. It's not a great juncture to be placing big bets. Wait for the price action to tell you how you need to position yourself. Context, very important. So I'm going to go through and we're going to take a look for some bullish stocks right now, and then we'll take a look for some bearish stocks. I am just going to go into my heavy buying list. That's it. I'm going to keep it super simple here. I could go into red hot and just show you a handful of stocks. Google, I actually like Google a lot. I've liked the price action that I've seen relative to the other tech stocks. You can see the nice steady rally here. Looks like it's going to be coming up on a bullish flag formation, but it's got a ways to go to break through that. So I do like Google. I like it off of that major moving average. Let's keep looking. Shop. You got a little bit of a bullish flag there. Snap. There's a bullish flag, but it's very choppy. So I'm not too excited about any of these yet. SOFI, this is a nice breakout above horizontal resistance in that downward sloping trend line. Excellent volume, good relative strength. SOFI, yeah, I like that. Could that be my pick of the day? Super strong in here. Let's get back to that 5-minute chart. You always want to have a 5-minute chart running in the S&P 500 so you know what is going on. So we can see that was a long candle right in there. It's a doji formation. Is it signaling that we have a top right now? I don't think so. If this were a normal trading session, here's how I would be interpreting it. You get a bearish 1OP cross right here. What has happened with the market since that bearish 1OP cross? Market has gone higher, 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 higher. Now, granted, compressing but moving higher. This is a bullish divergence. This is a sign that there's a pretty decent trend intact. So this is telling me that we're probably going to see higher prices. This is the high from yesterday. You can see how we were able to break through it. So my guess would be that it's going to try to float higher into the FOMC statement. But once that statement's made, anything can happen. So what happened prior to that statement doesn't even matter. If there's taper talk of this year, 2021, market's not going to like it. So, but again, if this were not an FOMC day, this is what I call a bullish divergence. This is what makes prices go higher, and it confirms trend strength. So that's why I'm going to show you the bullish side first. Let's see what we can find. I'm going to go into heavy buying. Take a look at McDonald's, top of the list, beautiful. You can see how it's continuing to move higher. What's the D1 chart look like? Not too bad. Still got some horizontal resistance overhead. Choppy back and forth stock. I'd rather have some better momentum. RCL, I like this. Nice upward sloping trend line, horizontal resistance, compression, tails above body, tries to get through, backs off, tries to get through, backs off. Could today be the one? 5-minute chart. Take a look at what the price action has been here. And since it's near the high of the day, I'm suspecting that yes, this has been nice follow through buying. But look at this. It's gaps up, gives everything back, and then chops around. So I wouldn't have a lot of faith in that. It does look kind of nice. It's not going to make my stock of the day because of that choppy price action. COP. Now there's a nice little breakout through horizontal resistance, almost up on the high. That's super strong. Definitely on the high for today. Energy stocks doing very well. I would also avoid stocks that have been bottoming out, that have had heavy selling pressure like this and now are bouncing. I don't like that setup because I don't like the stock on a daily basis. So if I'm buying it intraday for a day trade and it moves against me, I'm stuck. I'm stuck because it is only a little bounce with a lot of overhead resistance. So I'm not crazy about that. HOOD, it's kind of nice getting through some horizontal resistance in here. It's got decent volume, fairly new stock, not a lot of price history to it. So I'm not overly excited about it. Uber, this is pretty nice in that it has this downward sloping trend line, big gap up. You can see today it tried to get through the 100-day moving average. If it can close above the 100-day moving average, yeah, it looks pretty good. Twitter, getting through this downward sloping trend line here above the major moving averages. Looks okay. Very, very choppy stock. I'm still trying to find that one stock that I really can sink my teeth into that I like. So let's just keep clicking through some charts, see what we can find. A lot of these basic material stocks today are bouncing. So I am going to keep on looking, and that's all I'm doing is just flipping charts. A lot of bottom fishers here. AUPH, could I highlight it again today? Yeah, I've been highlighting it for the last couple of weeks, and you can see that stock has a strong head of steam. This is not too bad. Letter M, Macy's, got your flagpole right here, downward sloping trend line, breach to the upside. Yep, Macy's looks like it could go. MRNA. Boy, this one's been featured a lot too. I like it. Downward sloping trend line right in here. It's trying to get through that. That would be a bullish flag formation, but you can already see there was a bullish flag in here. That worked out pretty well. It's getting through this little resistance line. There's another little mini bullish flag in here. I like MRNA. That could be my stock pick of the day, but we'll keep clicking through to see if anything else pops up. That Sophie looks like a good one too. That looks like a really nice one. I think I'm going to leave you with those two as my picks of the day. MRNA, SOFI. And let me see what I can find on the short side. And I'm giving you something on the long side. I'm giving you something on the short side because the market could go either way. Facebook, yay, nasty. 100-day moving average breached. Upward sloping trend line breached to the downside. Below the 50-day, below the 100-day. Lots of room down to the 200-day. Put up that 5-minute chart. Market going higher, higher, higher. Facebook making a new low of the day. Yep, looks good to me. There was another one that I was keeping an eye on earlier today, PTON. That started to find a little bit of support in here, but also looks pretty nasty. Got a breach right there on a horizontal basis, but a choppy stock. Facebook is your short of the day. So how would I trade this? What do I do, Pete? What's my game plan? You already know the game plan. If that upward sloping trend line is breached to the downside, then you want to take a short position in Facebook. get a nice bullish cross in here, get the market starting to move higher again, then you want to look at the long list. Don't do anything until after the FOMC statement. Actually, the instructions for today would be 3 long red candles stacked one on top of the other after the FOMC statement, short Facebook. 3 long green candles stacked one on top of the other after the FOMC statement, favor the stocks that I showed you, SOFI or MRNA. That's all I've got for you today. Good luck with your trading. Careful of that Fed reaction. We'll get an initial knee-jerk reaction today. Tomorrow, we'll see what the true move is, and then we'll know how to position ourselves from a day trading standpoint. Swing trading, super tough right now. Market could go either way, in my opinion. Thanks. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.